Hello and welcome to this Forex Preview at XM.com. I'm Maria Pachordes, and joining me is Senior Investment Analyst Marios Hadjikyriacos. We'll be discussing the upcoming U.S. jobs report and the outlook for the dollar. So Marios, the latest employment report is due out at 12:30 GMT on Friday. And although forecasts indicate another solid report, there are signs that a slowdown is around the corner. Can you tell us a bit more about that and what we can expect over the next few months?
Hello, Maria. Well, we're actually seeing a lot of signs of a slowdown. So here's the short story. The Fed is raising interest rates. That means mortgage rates are going up. And they have. And that has already started to impact the housing market. We are seeing less home sales, for example, for several months now. And we are also seeing some signs from businesses that they're struggling to manage costs. Therefore, they are thinking about layoffs, firing workers, or at least slowing down hiring. We've heard from a lot of businesses lately saying the same thing. Juggernauts like Amazon, Facebook, Nvidia, sort of huge companies have announced plans to freeze hiring or slow hiring. And I mean, if that is going on at the trillion-dollar companies, you have to imagine it's also happening at the smaller businesses where labor costs are a much bigger share of overall expenses, right? It's more important for smaller businesses. So I think what's really happening is all these executives at these companies, they're just looking at the economy. They're seeing signs of a slowdown, not necessarily a recession, but a slowdown. And they're just starting to play some defense. Now, here's the good news. We are unlikely to see that this week. It's probably too early for all of this to show up in this month's employment data. Instead, what is expected is a very solid report. Nonfarm payrolls at 320,000. The unemployment rate is expected to fall to a 5-decade low. And that is also supported by business surveys. For example, we had the S&P Global PMIs, and those showed a very healthy increase in employment. So it looks like the jobs market was still healthy in May. And if that's the case, then the investors are just going to look mostly at wages. Job gains are a backward-looking indicator, like we just mentioned, but wage growth is considered a forward-looking indicator that can predict inflation. So that's why the Fed and investors just pay a lot of attention to it. Now that is expected to have slowed down a little bit. Wage growth is expected to have risen, but at a slower pace.
Turning to the market reaction now, what should we expect from this employment report, and what's the overall outlook for the dollar?
Perfect. So here's what has been happening over the last couple of years. So since the pandemic hit, the US employment report became an intraday volatility event. And by that I mean, we usually see a spike in the dollar, either higher or lower, depending on whether the data was strong or weak. And then that spike retraces within the next few minutes. So you see a sort of a sharp move, and then that move tends to fade very quickly. That has been a very classic pattern lately. Whereas in the past, non-farm payrolls used to be an event that could set an entire trend. That's not happening anymore. So it's just a lot of, well, you could say it's a lot of noise these days. Now, in the bigger picture, I still think that the outlook for the dollar is positive. So, look, we had a retracement lately. The dollar took a step back. I think that was a correction in the broader uptrend. Nothing much has changed. The Fed is still raising interest rates faster than most other central banks. And even though the US economy looks to be losing some power, the situation is worse in Europe and China. So if there is a global recession, that's usually good for the dollar because money tends to flow into the reserve currency in times of trouble. So long story short, I don't think we've seen the end of this trend in the dollar. And for me to change my mind, for a trend reversal in the dollar to become a more serious prospect, I would need to see one of the following three things. Either the Fed stops raising interest rates or pauses, or the war in Ukraine ends, or China abandons zero COVID policies, or a combination of these three. But we haven't seen any of this so far, and until we do, it's just difficult to argue against the US dollar.
Marios, thanks so much. And thanks for joining us at XM.com.